Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for June 9th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll notice here is price holding on highs. We had a gap down in after-hours trading yesterday, and price come right back to the 34.5 to 36 zone. 36 has been resistance here, and that's where bears have been defending after some initial attempts above that zone have been rejected. But on the other end of the range as well, what I mentioned before was a rejection of this level could give us a push to lows below this low and into 17 to 19. I mentioned a push into that zone would still be a buying opportunity for bulls. So would a rotation into 2400 to 2404 half. Right now we have two-sided trade. You got a very clear trading range throughout most of the week here. That would tend to suggest a breakout or at least a test of both edges of the range. I would say given the uptrending structure here, any push downward you'd have to be careful with, because any failed breakdown from this range would suggest a slingshot move in the opposite direction. Remember, this market continues to trend higher, so every pullback will still be a buying opportunity. The next uptrending target here, so should we push back and see a defense opportunity, the next upside target zone will be 2460 to 2465. Alright, let's take a look here at the intraday time frame. On an intraday basis right now, price is just kind of coiling up just below 34.5. We had a rejection off of 36s here. That is 36s. Price is failing to get above that zone. We got above it here yesterday and failed, retest failed, and then again here this morning and continues to see rejection off that area. This is the previous week's close price. So again, lots of bears defending on this side. If they don't get paid ultimately, the buy stops come out. Same thing on this side here, lots of bulls defending on this edge. If they don't get paid, the stops will come out and we'll see another rotation. But right now, this is the trading range. And so every rotation into 36, 37 is an opportunity to fade it back down. Every opportunity down here into 24s, an opportunity to fade it back up until proven otherwise. All right, let's take a look here at crude oil. There's crude. Let's take a look at the daily time frame here. So if we bring up the daily, what you'll notice here is price is holding at lows after the significant decline we saw a couple days ago. Wednesday, the EIA report came out, major selling pressure after that report was released, and it didn't take long. I mean, 5, 6, 7 minutes in, and we were way down here already and just kind of holding. So it was a significant flush and run of the stops. What I mentioned was we would likely see a continuation into 45.20 to 45.17, which would offer an opportunity to defend for bulls for a shot at 46.69 to 47.10. That's just a short-term target, and 45.20 was the low yesterday, and so far bulls are continuing to hold. This is kind of a two-day holding pattern after a drop here, and if there's any failure to get going above these highs soon, we could be looking at another leg down. So right now we've got two-sided trade on either side of this range, and bulls need to continue to be able to hold 45.20s for a shot at 47.10. So right now, still downtrending overall. We really haven't found a rejection low. Bulls trying to find a low here, but this is a weak low right now that could see another round of weakness to really find that low. Once we find rejection, very similar to this day, then we'll have a higher odds trade to get a better swing move. But until then, right now, short term, we're watching these edges in the daily time frame. So looking at the intraday here, you'll notice we have a very narrow range that's developed here over the last few hours. So in this view, this range, 45.65, that's where value is. We got 45.95. That's the near-term range right now. Very, very short-term. Failure to hold above the 45.64 would rotate and retest lows. And again, down here is where rejection would be for another opportunity back up the ladder. All right, lastly, let's drop this thing back to a daily chart here. One thing I wanted to show was 6B. So the British pound futures, we had the UK election the previous day here, and after that we've seen a gap down in the British pound. This is important because 128 is a key level of ours, 1.2, very important level, and 1.2231 is the FOMC level from March 13th. Since that date, we've had a big trend move up. Price formed a range above resistance and established acceptance above that zone, but based off the elections here, we've now gapped down and back below 128s. That is significant. We had a little bit of a rounded top as well. So all of this right now, all of this energy with this gap down and this push could open up a continuation downward back toward the FOMC level. That would be 122.31. You have a high volume node here at 125. That would be a big time scaling point. But it all depends on 128s here. That's the key level. Right now we gap below it and prices above it have been rejected. But we'll see how this thing continues to play out throughout the day and also heading into the weekend with next week. If there's any rejection of prices into this zone, that could be the opportunity to hunt for 125 and 122. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.